morning, guys. How are you? I hope you guys are doing very well, and welcome on this new video from Extreme Trader. This is Salah speaking. Um, Today's video will be nice, and I'm sure you will love it because it's showing you how we can go into a long term of trading and earn around between 15 to 20 pips per day. And that is, of course, not guaranteed. Nothing is guaranteed here at all, especially in Forex. So what we will do is our best, and let's hope that we can find these setups every day. If you notice my voice is different, it's because I am having some problem in my throat. I don't know what's happening, so forgive me for that. Before I proceed about this video, I need to discuss about the recent signals from Extreme Trader. There were some complaints in the recent time, and let me just explain the reason what happened here. We can see that in January, from 7th January until 11th, we had very nice results. It was full of green, only few losses here and there, and that is totally normal. I estimate this with 75% of winning ratio, and believe me, this is very good actually. Angela is doing amazing. She's doing very well with the signals, and I leave it totally to her because I trust her. Moving to the next week, from Monday 14th January until 18th, we can see we are still in green, only again some red days, and that is again very normal. You cannot expect a week without any single failure. You need to have prepared money management plan. Get ready for the losses. Losses is just part of this game. If you are seeking for any signal provider that has totally no loss or 100% winning ratio, then it's a dream. It cannot be achieved. Okay, moving to the next one. To the last week of January, we can see how the song stopped playing here. We can see from Monday 21 January until 25, we had two bad days. Thursday and Friday were full of red, and that actually pissed off some people. And I don't blame them. That is normal. After having winning 3 days in a row, we had these 2 days bad. And once I saw this, I told Angela, or actually we discussed together, me and Angela, that we need to do something here. These people are paying because they trust us. We have to do something. So that's why we had to stop the signals for a period of 1 week. Why? We needed to check what's happening. We didn't change anything, but just the market was unstable that time. The reason the market was not stable is because there are some news about a new economic crisis happening this year. Same like what we had back in 2008. That's why that week was full of events. I don't recall them now, to be honest, but there was so many events about China's trading problems with the USA. We had the federal government in the USA. It was shut down that time. The gold prices affected everything. So there was so many events that time that affected the market. So we stopped on 25th January, and then 4th February we decided to come back again, but again we had another 2 days, bad days. So total we had 4 bad days in a row. It's not in a row, I mean after 1 week. So after that we discussed something, me and Angela, about the signals, how it should be given, and we can see after our discussion we are back on track. The good results now are again coming back. Hopefully we have passed the red time. No more red days, hopefully. So I mean no more bad days like that. So hopefully we are back on track and the signals will be back again, because personally I cannot allow the signals to be bad. If they are like that, we will stop them. But we know our service, we know what we are doing, and that's why I'm just happy to say that I think Angela is again doing a very good job, and we are back in the game. That has to be cleared. Now, let's go to the main subject. How can we earn about 15 to 20 pips a day? And let me tell you something, that cannot be guaranteed. That is depending on the market condition. It depends on the setups you can find if you are lucky enough. If you didn't find the setup, don't force yourself to trade. You have to be careful. You have to know that the market, you have to follow the market. The market never follows you. The market never obey you. You have to follow the market. So if you cannot find any setups, don't force yourself to trade. A day trader doesn't mean that you have to trade every day. So sorry about that. Let's go to the subject here now. The first thing you need to do is, in my opinion, go to your IC Markets account. You have to go to your IC Market account on the client page and go to accounts and open a new live account. Now, what you need to do here, you need to open a standard account instead of the true ECN. You can see here, guys, this is why I love IC Market. I can just simply go to accounts, open new live account or new demo account. Now, what is the reason? The reason is true ECN account is good for scalping. But if you are looking for long-term trades, like aiming 15 or 20 or 50 pips or 100 pips, I always recommend using standard account. What is the reason? True ECN account is better for scalping because I know exactly where is my entry and I know exactly how much I will be charged as a commission. The commission is standard $7 per one lot. One lot. Okay, that means if I enter with, for example, 0.15 lot, I will be charged something around less than a dollar. It will be like $0.85 commission. So I know exactly how much I will pay for the commission, and I know how much exactly I will be aiming, and I will know exactly also where is my entry point without almost any spread. However, in standard account, there is no commission. You can see that here. By the way, this is demo account because I don't teach anymore on my live account. You can see there is no commission because this is a standard account. My entry was actually below this level. And look at the spreads here. I want to highlight something about IC Market. Look at the spread. This is very low, by the way. It's not high. Just information for the beginners. For example, the spread for the Euro USD is not 12 pips. Some beginners, they read this as 12 pips. It is not. It is 1.2. This is micro pip. So this is 1.2 pip. CAD GPY is also 1.2. GBP GPY is 1.6. So you can see the spread is very low. It's really very low. The highest thing I can find here is 2.5, I think. 2.4. These we don't trade at all, by the way. These are not the major currencies. We avoid them. We trade up to the GBP, up to the AUD CHF. So 2.8 is the maximum, the highest pip ever, the highest spread ever. I cannot find higher than that. That is what I love about IC Market. So after switching to your standard account, you have to come back and log in. You will receive immediately within less than a minute, you will receive in your email the credentials, the username and password to access your new live account, the new live standard account, sorry. So, what is the strategy we are going to use? Alright, good you asked me. What we will do is we will switch directly to the daily chart. Now, there is a question, why daily chart? Okay, why not 4-hour chart? The bigger the time frame, the better results or the better image of the market you will have. Let me tell you. For example, if you have one attempt of a support or resistance on the daily chart, you can't trust it on the second attempt as long as you are on daily chart. Ignore what you see on the 4-hour chart. This is something, guys. You have to get the point. Always, let me try to put this all together. This is important. This is very important. If you want to trade long-term trades, what you need to do is you always have to analyze. I don't know if this is how you spell analyze. I'm sorry. I think it's not, but anyway, analyze on bigger time frame and decide your entry on smaller time frame. This is very important because this is what we are doing to make sure our entry is as accurate as possible. So for example, you will analyze your signal or your setup on the 1 hour chart, okay? But you will decide your entry on 5 minutes. What is that? I'm just typing 5M. The font is a joke, I think. Hold on. All right. 5. Okay. On 5 minutes. You have to decide your entry on 5 minutes. What do you want to see on 5 minutes? What you will see, for example, on the 1 hour chart, you will see if you are on an uptrend or downtrend. You will see if you are on a support or resistance level. Then on the 5 minute chart, you will decide where exactly I want to enter. I want to see a first or second attempt of the support or resistance. So the idea is, whenever we are moving to a bigger time frame, we have to enter our trade on the smaller one. So if I am on the 4 hour chart, I will go to the 15-minute time frame. If I am on daily chart, analyzing and to know if the market is on up or downtrend, or if I want to know if I am clearly on a support or resistance level, I will go to the daily chart and I will analyze my trade on 1 hour chart. Sometimes daily cannot be enough, so you have to go to the weekly. When you move to the weekly, you have to see yourself on if you are on uptrend or downtrend or so. You have to analyze your trade on the weekly and then enter your trade on 4 hour chart. Why on 4 hour chart? You need to see if you are on a first or second attempt of support or resistance. Now, the thing here is when you are on these big time frames, we are talking about days of trading. We are talking about literally days. Because if you enter a trade based on 4 hour chart, now we are talking bigger time frame than 15 minutes. Now we are no more scalping. Now we are on long term of trades. Applying exactly same rules of hit and run on the bigger time frame can bring you a good results. But there are some rules we need to follow first. So again, last thing, if you want to analyze on monthly, what do you think? We will move to the daily? No, we are still on 4 hour. We never decide our entry on more than 4 hours. Okay? So, back to the subject here. Look at that. I entered this trade. I'm now on $4.50 of profit. And again, notice there is no commission because we are now on the standard account. Now, look at the 4 hours. Let's check the daily chart. So what is the analysis I did here? It's simple. What we did, we saw that this is a resistance here, and this resistance has been broken out by this breakout candle. So this resistance now is gonna be the new support. Now, yesterday's candle, it closed like this. Sorry. We are on daily chart, guys, okay? So let's keep this in mind. Now, let's talk about the candle shape. This candle shape, this one, the closing candle of yesterday, and this is how it looks. Just a small bar with long wick and long wick also at its top and the bottom. So this is not indicating any strong bearish movement. This is indicating that the market was closed on a almost same pressure from the buyers and the sellers. So let me tell you, if this candle closed, for example, in this shape like that, with just a small tiny wick at its top and no wick at its bottom, if it is red candle like that, okay, if it closed as a red candle, in this case I will not enter my trade, because having this long or full bar like that with no wick at its bottom, no tail, that indicating a very strong pressure from the sellers, meaning the market is expected to even go more down until this support level here. So you have to pay attention to the candle shapes. I wish we can talk about this in this video, but unfortunately there is no time for that. We have to prepare one video to discuss only how to read the candle shapes. So now remember, on the 4-hour chart, on the daily chart, I analyzed it that we have here this resistance, and after the breakout, it's gonna be the new support. Now, what we need to do, we have to go to the 1-hour chart to discuss this setup. So again, what I'm seeing on the 1-hour chart is this. We see here this resistance. This is the resistance we talked earlier about, and this is the breakout. And look at that. This resistance now has become the new support. So what I did now, what I saw here was a support number 1, and I simply entered on a support number 2. Remember, I am on the 1-hour chart. So if I want to exit my trade, I will exit at the nearest resistance. And in this scenario, the nearest resistance is right here. So I can just set my take profit on this level, and that should give me about 12 pips. That is actually very good, not bad. Now, there is one thing here. How can we know if the candle is actually going to reverse? Because we are on the 1 hour, this is big time frame. So again, we need to make a video about the candle shapes, because we can see these 3 weeks here of this candle, the 3 tails here. These indicated a strong bullish reversal, and I believe that if I want to have safe entry, I can exit my trade at the nearest resistance. But this setup, I believe it will even go more up until hitting this previous support. So we can see what will happen later, but this is what I believe. We are expecting about approximately 40 pips from this trade, but to have safe entry, I will exit on this level. So we need now to enter another trade. So now, if we are aiming about 20 pips a day, that's half of it is almost in the bag. We are just waiting for the candle. They will take a long time, guys, because this is 1-hour chart. Let's go to the daily chart again, and now let's go to another assets. Let's go here, for example. Now here I cannot find anything good. Why? Because there is no clear support, or there is no support here to rely on. I can see only a resistance. In this scenario, I can see just a resistance, and the market now is approaching this resistance zone here. So I cannot really do anything here. I have to wait the candle to go up here and then reverse, or just to reach this level of the resistance here. So this market, I cannot do anything. And remember, we are on daily chart, so each candle representing 1 day. It will be a long time to wait or this candle to come up here. So you have to find something else. You need to find something that is gonna happen actually almost immediately. Now, this is interesting. Now what we see here is a resistance has been broken out by this bullish breakout candle, and remember on daily chart. So we see here a first attempt of the support, and now we are assuming that this is a good entry for a support number 2. However, again, don't forget you are on daily chart, so you cannot just decide, you cannot just enter here with buy option. You need to look at the 1-hour chart. Let's move on to the 1-hour chart. Look at that. 1-hour chart telling me that my entry is actually kind of late. It was good to enter if I was on the support level here, or even like this here. If the candle was here on this support, actually, to be honest with you, I would have waited until here, like that. So we have to switch to the 1-hour chart, and we need to wait to find the right time to enter. Now, this is not the right time at all. Now the candle is moving up. Now we are 20 pips late. So definitely you cannot enter here. Just analyzing your trade on daily chart doesn't mean you have to enter on daily chart. You have to go back to the 1-hour chart, and you can see your entry was late. Why this was better entry? This was here actually, if I want to be very accurate, like that. Perfect. Why? Because what we have here is this support, and this red candle is a bearish breakout candle, and this support has already become a new resistance represented by this long wick here. This long wick here, don't underestimate it. Remember, you are on the 1 hour chart. This long candle here is also a resistance, and this resistance has been later been broken out by this long bullish candle. So therefore what we can see next is this resistance has become as the new support. Now, what is your options here? Your options is you can wait for another attempt. So this was support number 1, and you can enter here on support number 2. You can place buy on support number 2, and if you want to exit your trade, you can exit it at the next nearest resistance, which is also here. This is to have a safe trading. So by that we can expect around 23 pips. 23 pips plus the 12 pips we are about to get from the CAD CHF. That is about 35 pips, and that is actually above our target. That's how you can actually get some pips on long-term trading. Again, I want to tell you here that the really style I love about trading is hit and run. It's just giving me full of confidence in trading. I have no intention on changing my style, and applying it on daily chart is very, very important. Now, let's talk about something very important also. How to decide my entry, especially on daily chart. We have to discuss it, guys. It's very important. So, let me go through this. Let me just zoom in. Okay. Perfect. Hold on. Okay. Yes, just like that. Okay. So, for example, again, I'm on the daily chart. Let me try to just be sure. Yes, this was. Hold on. I just need to be sure so we don't mess this up. It was a support. Yes, it was. Correct. Correct. Yes. All right. So this was the breakout. Okay. Let's go back to the setup. So what we see here, if we are on daily chart, we can see that we have here a support number 1. Now, of course, if we switch to the 4-hour or 1-hour chart, we will see so many attempts of this support at this level. We will actually see a ranging market at this level here. Let me switch to the 1-hour chart. Let me just mark it first, so we know which level we are on. So let's see the same level on 1-hour chart. So this is the support number 1 on 1-hour chart, and you can see how the market was actually ranging and having so many attempts here. And definitely if you are applying hit and run here with the normal rules, before, you can never enter here. But remember, when we are aiming long-term trades on daily chart, when we are analyzing our signal on daily chart, it's totally different story. So what we see here is a clear support number 1. Okay? So what we need to do now, if you are aiming a good signal, we can aim for the support number 2, which is here. Now, how can we decide our entry? As I told you before, guys, we always have to, this is very important now, you have to put your line in a way touching the shortest wick among these candles. So among these candles, where is the shortest wick? Sorry, not this one, I included this one. This is the reversal here. So among these, where is the shortest wick? Or let's say not the shortest wick, in a way touching even the shortest wick. Yes, let's see. I will put my line here like that. So yeah, I will put my, oh my god, why is it moving? Okay, All right, okay. So I will move my line. I will draw my support, not like this, not like this, not in a way touching only 3 weeks. You left these guys behind. You have to draw your support line in a way touching all of them, meaning like this. Now, when I draw my support line like that, I included every candle and every wick on this reversal. Not a single candle left without being touching the support line. Now, let's see what happened next. The reversal happened exactly on this level. It just went a little bit below. Let's see how many pips was that. 25 pips. Actually, that's a lot. But we have to remember that this is the right way to draw the support line. And if you are aiming for long term of trades, you have to prepare that this candle might go a little bit down against you. It's a long term trading. So actually, to be honest, you cannot just keep watching the market in this scenario. Um, you have to keep watching how can I say that now? You cannot keep your eyes on it the whole time, just like scalping. You have to check it time to time. Setting a stop loss, in my opinion, will not help here. You have to pay attention to how the candle is reacting to the level. Let's see that, guys. Okay, I will just draw the shape here. So let's see what happened exactly on the support number 2 back on 1 hour chart. So now I am here on the 1 hour chart. This is the 1 hour chart. Like that. So this was the support number 2. And you can see the reversal was really nice here. So let's discuss what happened. If you guys, those who are following me since long time, do you know what this candle shape meaning for me? This one, this price action. This candle, I said before many times actually, if I am on a support level and I saw this candle, I will be very happy because this candle meaning potential for a strong reversal. Now the market should actually reverse and my trade should be a winning one. Of course, nothing guaranteed, but anyway, this is the price action that I trust the most. As a candle with a long wick at its top and a small tail at its bottom on the support level, this one indicating that the market now is going to reverse. Now this is exactly what happened in this scenario. We can see that this candle, that's why I'm telling you, you should not set your stop loss based on a price level. You have to decide your loss based on the price action, based on how the candle are actually closing on the certain level. So the candle closed like this on the support. I will be actually happy. I will be excited to see what will gonna happen next. And look at that, what happened next. The candle immediately reversed and started going more and more up. Now, can we expect to get all these pips? Absolutely not. It's really hard to get. So if I want to apply hit and run here, if I want to have a safe trade, so I will enter exactly at this point here, at this red line, and I will exit my trade at the next nearest resistance, which is here. Let's see how many pips that could have given me. 50 pips. 50 pips. Almost 50 pips you could have earned from this trade. And that is why, because you are analyzing your trade based on a daily chart. Now, of course, I will not stop here. I need to go to another more and more examples. Let's see more and more examples, guys. Okay. We have to see more examples. Look at that. I think this is the one also. Yes, perfect. Look at this. On daily chart also, we had this resistance. This resistance has been broken out, okay? And if you go here, we can see this is the breakout candle, and this resistance has become the new support. Now, just as I told you, we need to draw our support line in a way touching all of the 3 wicks we have here on this reversal. So, drawing it like that is wrong, you have to draw your support line like this. Please look what happened. It just perfectly matching this support here, a support number one, and drawing my line very accurate in a very accurate way like that, we can see that on support number two, the reversal happened exactly on this level. Now, let's go to the 1 hour chart and see that on uh, see that more clear. Look at that. Even guys, this is amazing. Even on the 1 hour chart, look at that. Look what happened. See this line here I draw. It's also matching perfectly, uh, touching all of the wicks of these three candles. And even in the past year, it was also a strong support. This is really great to see that how accurate what I'm teaching here is going on, and that is nice. And we can see the reaction to this level. It was very strong, and the candle shoot more up. It fly more up. So if I want to exit, if I want to enter my trade here, I will definitely exit at the next nearest resistance, which is here. So that should have given me, wow, almost 90 pips of profit. 90 pips. 90 pips is more than enough for a day of trade. And look at that. This is 1 hour chart. So what I wanted to tell here, analyzing on daily chart, let me just summarize it. Let me summarize it. For 20 to 30 pips a day, you need to do the following. Okay, analyze on daily chart. Make sure. What is that? Sorry, this is a new keyboard and it's hard to type on it. Make sure you are drawing your support or resistance lines on a way touching. This is for the second attempt. Make sure if you want to enter second attempt of any support or resistance, make sure you are drawing your support or resistance lines on a way touching all the wicks on S or R1, just as I showed you earlier. Okay, and decide if you should enter based on 1 hour chart. Let me clear here something. If 1 hour chart was not clear enough for you, you can switch to the 4 hour chart to decide if you can enter or not. Again, what we are applying exactly hit where is the and here? Okay, hit and run rules. We are applying exactly hit and run rules, and I talked about it many times. I will not go again to explain what are they, but hit and run rules is what we are going to apply on this strategy. Now there is one thing also. What is it you can see on the 1 hour chart to tell you no, don't enter here? Good question. Let's try to find something. I am now on the daily chart. I'm trying to find a setup. Let's see this one. This one here, we can see clearly that we are on a support level. So this resistance has been broken out, and we can see here we have nice attempt of a support one, and right now I can here enter on support number two. Let me switch to the 1 hour chart and see this on action. So now switching, and look at that. This is what we can see on the 1 hour chart. The strategy, of course, cannot be winning every single time. Okay, so what we see here is actually a candle that broke this level again. So this is the attempt number one of the support, and what we have here is supposed to be a support number two. Now what's going on here? What's going on is this level has been breaking out, and this reversal indicating that the market now is retesting the level, and that support now is becoming the new resistance. Now, there is something important to see here. This candle shape, it's not the candle shape I trust. It has no price action that I trust at all. Again, the candle shape that I trust the most is a bar with a small wick at its top and long tail at its bottom. Hold on. Yeah, correct, yes. This one, however, they are equal in size. The both wicks are equal in size. There is no indication for reversal. Actually, as a matter of fact, we can see here this candle indicating a potential bearish movement because it is the opposite. I'm talking about the red one. Sorry, I'm talking about the blue one. The blue one is look like that. Small wick at its top and a bigger wick at its bottom. This one usually indicating a potential reversal. So seeing it here, this one indicating a potential reversal and the market expected to even fall more and more down. That's why here, what I see here on the 1 hour chart is telling me don't buy. Even if it's reversing later, I don't care. I want to be safe, always have a safe entry. So we can tell here from this price action that no, I will not enter here. However, on daily chart, it looks amazing. And again, I'm not telling it will not reverse. I'm just telling it might reverse, it might not. I'm not sure. And if I'm not sure, I never enter. I don't want to risk my money. If you want to have continuous profits from Forex, you have to be sure that you are avoiding over trading, avoiding forcing setups. You have to be careful. Don't enter a setup that you feel it might not work. So this one might work, it might not work. So I'm not sure about it. So I don't want to risk. If it will work, it's okay. Congratulations to those who entered it. So by this, I hope we have covered the strategy in details. And on the next video, I will do more live trading with this strategy. The live trading video will be actually a long time. No, I mean for me, I will record from the morning until evening because on 1 hour chart we are expecting about maybe 3 to 4 hours for each trade. So I'm sorry if the video was long. I tried to summarize it to the maximum. Yes, so guys, I hope that was informative to you, and I would like to thank you for watching.